And on Wednesday, we got the CPI number. MBS were up 19 basis points. Early stocks were up 6 points right after the CPI was announced. Bonds were roughly unchanged heading into the CPI data and rallied moderately on the as-expected result. Core month-to-month CPI came in at 0.4 on a 0.4 estimate, was 0.4 previously. Core year-over-year CPI came in at 5.5 on a 5.5 forecast. It was 5.6 previously. Today's April CPI number looks decent on the headline number of 4.9, but the core at 5.5 is still way above the Fed's 2% target. Shelter was the biggest driver of the increase, followed by used cars and trucks. And the rent is still too damn high at 8.8%, but rents and CPI are on leases signed a year ago, and today's advertised rents are coming down. On Tuesday, the MBA released their latest credit availability report, and the trend across the board remains lower. When it comes to mortgage lending, far more would-be borrowers than in recent past are finding themselves confronted with the great big no for an answer. All the index components are down at least 28% over the last 5 years. One must keep in mind that this is just emerging from an unprecedented bacchanalia of credit creation during QE4, so this is to be expected. If history teaches anything, it's that the most important indicator of an impending financial crisis is the explosion in the availability of credit. Record home prices, an affordability crisis, and crushing shortage of inventory reveal that we have just been through quite the crisis. The drop in credit lines are the road back to normal. It's just part of the fix to the damage done. We did get big news today that the FHFA rescinded its DTI-based LLPAs. So the FHFA on Wednesday said it had rescinded its upfront fees on borrowers' debt-to-income ratios for loans acquired by Fannie Mae and Freddie Mac. The FHA announced in March it would be implementing the fees in order to engage with industry stakeholders and better understand their concerns. They appreciate the feedback, and everybody was pissed off, so they decided to not do that. It was going to be an administrative nightmare. We also got the New York Fed Chairman, John Williams, who said it would take a couple of years for inflation to get back to Fed's 2% target and cautioned against forecasts of rate cuts this year. Finally, somebody making some sense over there. There were a few rate-friendly tidbits buried in the CPI data, but for the most part, it was right on the screws versus expectation. For those wondering about the tidbits, the core services prices, including housing rent, declined noticeably. The market reaction tells us that the report was clearly good for rates, but was it enough to change anything in the big picture? The unwillingness to rally past any range boundaries tell us the story here. Hurry up and wait for a collection of multiple additional economic reports spaced over a few months that cohesively suggest a shift, which we could tell you something long term, but you're going to be waiting. At the end of the day, we were up a third of a point. The 10-year went down 9 basis points and stocks gained 18 points. At the end of the day being at 100.88, we are right here in this wide range with basically four floors around the 100.803 mark. And then we have a ceiling at 101.34, so a lot of room to run there. We also got some stock news. Loan Depot originated $5 billion in the first quarter of 2023, a 23% decrease from quarter four, but the gain on sale increased from 145 basis points to 243 basis points, so that's quite a bit more money. UWM Holding Corporation, the parent of United Wholesale Mortgage, reported a financial loss for the first quarter amid a decline in the fair market value of its mortgage servicing rights and falling origination volumes. Non-GAAP adjusted net loss of $106 million in the first quarter, double the $53 million net loss in the previous quarter. The company's GAAP net loss was $138.6 million in the first quarter, according to documents filed with the SEC. Higher rates and lower inventory hurt the company's production in the first quarter. UWM originated $22.3 billion in mortgage loans in the first quarter of 2023, compared to $25.1 in the previous quarter and $38.8 during the first quarter of 2022. Its top competitor, Rocket Mortgage, originated $17 billion in the first quarter of 2023. The company's total gain on sale margins increased to 82 basis points in quarter one compared to 51 in quarter four and 99 in quarter one of last year.